Hello, everybody, and welcome to the webinar. Thanks for joining us today. We're going to be getting started with our program, talking about cybersecurity and cyber insurance in the COVID-19 environment. And as we get started, I just want to do some introductory material. Again, thank everybody for joining us. I hope the program will be valuable for everybody. It's our aim to provide all of you, our listeners, with actionable information that you can use when you go back to your desks and back to your offices after you listen in. So thanks for your attention. And as I said, we'll try to make that pay off for you. To start with, we have a brief agenda, a capsule agenda. We're going to begin, as I said, with an introduction to my law firm and also to my co-panelist, Adam Abresh and his firm, Acrisure. Adam has a presentation for you on the broker's perspective about cyber risks and cyber coverage that he'll go into some detail and provide you with a lot of information you can use from his particular perspective. Then I have a presentation for you from my perspective as an attorney, as policyholder counsel, for some key terms and issues that you should be aware of as you move forward and make your decisions about purchasing cyber policies, renewing cyber policies, and making sure you have the best protection for the money. And then we will wrap up. First, let me tell you a little bit about our firm, Santomassimo Davis Outside General Counsel Solutions. Our firm, we like to think, is organized a little bit differently from other law firms. We focus on providing our outside general counsel service offering, where we serve as an outsourced law department. So what that means is that we duplicate the resources of an in-house law department that a very large organization might have, a typical Fortune 500 companies, large enough to have a team of in-house lawyers that are very well acquainted with their business, very well acquainted with the business environment in which they operate, and how to use, how to be strategic about legal problems. The mid-sized company, middle market companies, not large enough to hire a team of in-house lawyers, but they can outsource that function to us, and we'll duplicate that in a number of ways. First, by providing experienced business-minded lawyers that know what they're doing. That would be very similar to the types of people, experienced people that would be general counsels for significant sized companies. Number two, make available lots of different team members, not just one person. So there's a broader depth of expertise there. And then number three, if wanted, if desired by the client, we will do that on a fixed fee basis to replicate the salaried cost or the fixed cost of in-house lawyers rather than an hourly fee billing model. We think this makes us unique or very close to it in that we are willing to take the business risk associated with a fixed fee arrangement rather than a retainer agreement that only benefits the law firm and is just a minimum purchase of legal services. With that, I'll speak briefly about my co-panelist, Adam Abresh, who's with us here today. Adam is the cyber risk practice leader for Acrisure. He's responsible for designing custom cyber crime and technology solutions for the firm's clients. He's also a guest lecturer at Fordham and Hofstra, and he leads the cyber liability education for over 350 Acrisure partner agencies throughout the country. Acrisure itself is, as it says here on the screen, the industry's fastest growing insurance broker. And it's a really great firm, and I think you're going to enjoy listening to Adam give us his perspective, and in particular, his depth of expertise as a broker in this particular area of cyber insurance coverage. I'm going to now switch over and allow Adam to jump in and share his screen. Adam, go ahead. You can jump in anytime.
All right. Hang on just a second. I'm trying to share my screen right now. Hang on just a second. Looks like the screen sharing is not kicking over to me.
Is that right? All right. Well, we'll go to the backup plan. It's always good to have one, right? And we do. So I'm going to put your presentation materials up on the screen. If you want to just begin talking, and I'll get that rolling while we're chatting.
Yeah, absolutely. So first of all, thank you for having me today. Obviously, cyber risk is something that's near and dear to my heart. Something that I do every single day, all day, day in, day out. So I hope to just kind of give everybody on here a little bit of a perspective as to, what we see in the marketplace every day, how things have changed along with COVID, some of the numbers associated with cyber risk, what's at risk for your company, how some of these breaches occur, the costs associated with a cyber incident, and then finally, some solutions at the end. And as always, we'll leave time for some questions. So we can kick it over to the next slide. And next slide. So obviously, as everybody here knows, things have changed drastically since the COVID outbreak, right? And, there's been a number of different implications for business communities. And I think, it's important to think about how this affects cyber risk. So, cyber risk has been affected by COVID in a number of different ways, right? There's a number of different folks now that have been forced to the remote work environment. So you're talking about, Wi-Fi networks that maybe aren't secure as the corporate networks that they once had. You can also talk about how, there's a number of different applications that everybody's using today, right? Like today we're on Zoom, but I know that I use WebEx and Uber Conference and Google Meets and Hangouts, right? And all of those different applications all come with different logins. So now we're talking about different credentials that folks have to remember. And what that does is it provides an opportunity for various bad actors to seize on all of these new communications and input their take on it, right? And capture those credentials, move from network to network. It's a scary place to be. So Ginny Rometty, who's the former CEO of IBM, called cybercrime the greatest threat to every company in the world, right? That's a pretty powerful statement. Why do we say that? There's up to 90% of folks in a recent survey say that they had been directly impacted by a cyber incident. And if you look at the numbers behind cybercrime, you look back to 2018, we're talking in the billions, right? 600 billion is the overall worldwide cost of cybercrime in 2018. You notice in 2019, that number jumped to over 2 trillion with a T. 2020, numbers are still pouring in, but estimated to be over $6 trillion. And that's the total worldwide cost of cybercrime. So Cisco Systems recently released a report talking about the fact that they had tracked and monitored over 73 trillion threats over the course of a year, which translates to about 2 billion per day. And that's just Cisco. FBI recently said that they've tracked a 400% increase in cybercrime since the outbreak of COVID. Right? 61% of all cyber attacks are targeted towards small and mid-sized companies. A ransomware attack happens somewhere in the world every 14 seconds. And these hacking toolkits can be bought online on the dark web for as little as $1. Despite all that, only 30% of all companies currently carry standalone cyber coverage. And if you move to the small and mid-sized space, that number actually goes down slightly. So a couple of questions to keep in the back of your mind as we go through this presentation is, do you have a cyber incident response plan, and will you survive a cyber attack? So I think this, to frame everything, this is a quote by Don Jaycox, who is the CIO, DLA Piper, very large international law firm, right? And he talks about how they had planned for the loss of certain aspects of their business, but they hadn't planned for the complete loss of everything. So what happens when everything goes sideways? So let's start off with what's at risk for a company, right? It breaks down into 3 main categories. You have data, disruption, and dollars. Now, I will tell you, data, right? We heard a lot about data breaches for a long time in the past few years. You hear a lot about data breaches, right? And so it's easy a lot of times for folks to say, you know what, I don't traffic in a lot of data. I'm not a retailer. I'm not a healthcare organization. I'm not a bank. I'm not, and it's easy. The list goes on and on. What we've seen is, data is still a risk, certainly corporate data. Folks have all that information, whether it's financial information, if there's, different information that's passing back and forth between you and clients, but also every firm has employees. right? And we've seen more and more cases where, yeah, maybe you don't traffic in a lot of data as part of your everyday business, right? As a manufacturer or a wholesaler, for example, but you still have a lot of employee data, former employee, prospective employee data that you're responsible for protecting, right? W-2 information, financial information, direct deposit information, the list goes on and on. And so you're responsible for protecting data on the premises while it's in transit, emails, faxes, texts, and then finally when it resides with a third party, right? And a lot of people think that they absolve themselves of liability when they outsource something to a third party, but keep in mind, data privacy laws apply to the owner and the collector of that data. And so you can't transfer that liability even via contract, right? So if there's a data breach that on data that you've collected and then entrusted to a third party, ultimately you're still responsible for responding to that. So there's been a big shift recently, right, between data breaches, which is the classic cyber breach that we've heard a lot about, to disruption, right, which is a disruption in the supply chain. And that's been brought about by the extreme explosion of ransomware, which we're going to talk about a little bit more detail. But ransomware has not solely focused on data, but is more focused on disrupting companies' everyday life. And then finally, dollars, right? I think this is something that everybody understands. There's an explosion of cyber crime where people are stealing money, people are tricking people into sending money, people are compromising credentials, and then using that to impersonate people and make transfers within bank accounts. So that's what's at risk from a high level. Let's take a look at how some of these breaches occur. You can break that down into three main categories. You have your outside attackers, your insider threats, and your third-party incidents. Let's start with outside attackers, typically characterized by our friend here in a hoodie. All right, so I mentioned before, and part of the significance behind this map that I like to point out to people is that Johns Hopkins put out this map to help folks, kind of get an awareness of COVID, especially early on, when everything was still happening, still fresh. They came out with this map as a resource. The day after this map was launched, you could go online and buy an injection kit for $250 that would allow you to basically inject malware or malicious software into Johns Hopkins map so that when somebody clicked on something, it would download a keylogger software, a software that logs the keystrokes that somebody inputs into their computer so that folks could capture login credentials and could penetrate people's networks, right? So here's Johns Hopkins trying to do something good. There's just as many bad guys, if not more, on the other side trying to use that for their own purposes. So there's also been an explosion of fake COVID websites. Folks are looking for information. So what do the bad guys do? They set up a whole bunch of traps for people to click on, right? Now, you heard me mention malware, malicious software. That's what malware is, right? So it's computer code that is designed to corrupt legitimate computer code. And now for, I think, the third year in a row, there has been more malicious software or malware created in terms of lines of code than legitimate code. What does that tell us? It tells us that there's a whole bunch of people out there dedicated to designing this malware, and it's not going away. And one of the most famous types of malware is ransomware. So ransomware is a type of malware that gets into a system and locks down either data or access to the systems. All right, so a famous case of this happening is a company called Colorado Timberline. And what happened with Colorado Timberline, this was one of the fastest growing companies, small businesses in the US. And what they did was they were a printing shop, right? So they're a printing shop out in Colorado, small business, growing, and they won the contract for Shutterfly, right? So all those calendars and mugs and holiday stuff that you guys got, imagine being a small business that's a printer and winning that contract. Pretty cool, right? So they're growing and they're hiring more people and they're bringing more people on board and they're getting investors. And one day they're hit with a ransomware attack. And they thought they had recovered. Turns out they had botched their recovery, got hit with another ransomware attack. And now Colorado Timberline doesn't exist anymore. So one of the fastest growing small businesses in the country, growing by leaps and bounds, taking on investor money, and now it doesn't exist anymore because they didn't handle a ransomware claim correctly. Another type of ransomware that you'll hear about is Maze ransomware. Maze is a new variant of ransomware, and it's a little bit different because the bad actors infiltrate the systems, get in, and start to exfiltrate data. Then they unleash the ransomware, which is kind of that big red flashing light on your computer screen, but they only release that ransomware after they've exfiltrated the data. And then the threat that they say to all of the folks that are affected by it is, if you do not pay us this ransom, we will publish all of the information that we've taken from your computer systems. What you see on your screen right here is a type of ransomware called the WannaCry ransomware. Now, I don't know how many people have seen a ransomware screen, but what you're looking at is the actual screenshot of what WannaCry ransomware looks like. So if you look closely, what you can see there is the first question is, what happened to my computer? All of your files are encrypted. Can I recover my files? Sure, we can get all of that access back to you. All you have to do is pay us. How do I pay you? Pay us with Bitcoin. What's a Bitcoin? Don't worry, here's a link. If you're listening to what I'm saying, what it's probably starting to sound like is a help desk, and that's exactly what it is. So ransomware is a business. These folks are operating as business people. That's what they do. They come in every day, they punch a clock, and they unleash ransomware all over the world. So they're trying to get your money in the form of Bitcoin into their wallet. That's it. It's transactional for them. It's not personal. Another type of outside attack is a DDoS attack, a distributed denial of service attack. So this is a firm, Kravis, large law firm, was hit with a DDoS attack. And basically it's a brute force attack. And so it's designed to overwhelm the networks of a company, right? So you're talking about billions or trillions of requests per second, all hitting your network simultaneously. So regardless of who you are, how big you are, that number of requests can shut you down. So it doesn't matter if you're a manufacturer or a law firm or a financial services company or a wholesaler, right? You get hit with this, you're entirely knocked offline. Business email compromise, right? I don't even put the example of a company. Think about your firm, think about your company, right? What would happen if somebody was able to take over access to your emails, right? Now we're not even talking about spoofing. What if somebody got the logins and now they're operating as you within your emails? What could they do? What kind of information could they get from your clients, from the businesses you work with, from your bank? So insider threats, right? We talked about outside attackers. Insider threats, what are we talking about? Malicious or disgruntled employees, right? I'm sure there's none of those on this phone call today, but they do exist. And there's not really much you could do to stop a malicious insider, right? And I like to tell this story because it could happen at any organization. So there's a company called Enervest, right? Enervest is a financial firm that helped execute trades on behalf of some of the big Wall Street banks. Now, that may not be what you do, but this story could happen to anyone. Basically, Enervest decided that they were going to fire their IT guy. Their IT guy found out about that before they had terminated him and terminated his access. So he reset all of their servers to factory settings. And it took them 3 months before they were fully operational again. Now, another thing we have to think about, not just malicious insiders, but let's think about insider threats from another perspective, right? You invest in firewalls, you invest in encryption, you invest in antivirus software. And despite all that, we still have our buddy Dave here in the corner, represented by human error. We make mistakes. And it's easy to make mistakes when there's an entire army of people out there that are solely focused on tricking people. So phishing and social engineering, I'm sure you've heard these terms, right? Here's an example, and this is a particularly good one. I mentioned all those logins before, right? Everybody's got logins. If you have Microsoft, you got logins. So this is a really good phishing scam that went out there. Looks pretty legit, right? Got the Microsoft logo and everything. Hey, we just need you to confirm your email password and click here. And so somebody says, oh, okay, types in the password, they already have the username, and they go about the rest of their day. Don't even know that they've been compromised. And now a bad actor has a username and a password. So they can start to use that to jump from your Microsoft account to your email accounts, to your banking accounts, to your third-party vendor accounts. The list goes on and on. Here's another example of how folks utilize kind of these phishing schemes. You'll notice here, this one's focused specifically on COVID, right? People are trying to get information about COVID. And, if they get an email that's supposedly from the Ministry of Health, right? This is overseas. They're going to say, oh, well, you know what? Latest update. I see this attachment right here, coronavirus latest update. I want to learn about that. So now all of a sudden you click on that and that attachment is blank. But what you don't know is in the background, it just downloaded a whole bunch of malware onto the computer. So that's how these things happen. And just as an example, right? How does this turn into money? You get somebody to go to a fake page. Somebody enters their credentials. Now, all of a sudden, that bad actor takes those credentials, goes in, uses it to use a bank to essentially alter instructions or pay to a different account, and the attacker receives the funds, and that's it. Last part of how breaches occur, third-party incidents, right? What you're looking at here is not the bottom of the table. It is the idea of a hub and a spoke. So if you think of your company as the hub and all of the other businesses or vendors that you do business with as the spokes, that's what you need to think about, right? So if my hub, if my company is being well protected and we're buying cyber insurance, right, that's great. What about all the people that plug into your networks? What about your cloud providers? What about your billing services, credit card processors? Think about all the third parties that your company uses to do business every single day. What kind of protections are they putting in place? What do your contracts look like in terms of indemnification? So now we talked about what's at risk and how breaches occur. Let's get into the costs behind these. What does it dollars and cents equal to you? Right? These are real life examples. This is a data breach that occurred. My client, this is actually my personal client that this happened to. Small firm, say a professional services firm. They had gotten a call one day. My client got a call from the FBI. My client promptly hung up because he didn't believe it was the FBI. FBI took him 2 or 3 more calls before he convinced him that he was actually an FBI special agent. Also on the phone was Department of Homeland Security. And the reason that they were calling him is because there is a massive breach that they had tracked back to my client's firm. And they said, look, we want to know if you're aware of this, yes or no, and also what you plan to do about it. That's a scary call to get from the FBI and the Department of Homeland Security. Right. And so at the time, my client had a $250,000 add-on policy to one of their other coverages, their package or BOP policy. And we had discussed getting higher limits, but he said, I'm a small firm. I don't think I really have to worry about this. Long story short, carrier paid out the $250,000. The 783 that you see at the bottom of the screen was the total tab. Ransomware. Just had another ransomware incident the other day. I could use all different kinds of examples, but what I will point out to you here is the actual payment in this case of the ransomware was just over $700,000, but there was another $700,000 involved in the legal and the forensic expenses, along with the data restoration and business interruption costs associated with that ransomware attack. Finally, business email compromise. This was somebody tricking someone into sending payment somewhere, ended up wiring over $400,000 to the wrong account as a result of that. So, do you have a cyber incident response plan? Will you survive a cyber attack? Depends, right? That's a lot of scary news, a lot of bad news. The good news is there are solutions. And the best solution that we've come up with is the combination of cybersecurity and cyber insurance to make your organization resilient to cyber risk. So cybersecurity and cyber insurance, neither of them are a silver bullet, but the combination of the two will make your organization resilient to cyber risk. So, in terms of cybersecurity, there's a ton of information out there. There's a ton of different ways to go. And I just want to bring this up because from a high level, the 20 consensus audit guideline controls, if you take a look at this, breaking it down very quickly, what it's saying is you should know what you have in hardware, what you have in software, how it's configured, right? How it's defended, who has access to it, how are you testing the security, what are you doing after you test it, what are you doing to test your incident response capability? And then what are you doing to train your employees surrounding everything that you have in terms of hardware and software? That's what that says in a nutshell. So folks ask me, what can I do? Okay, but what can I do? So high level, will this stop everything? No, right? But it'll help. Firewalls and antivirus software. I compare this to, a lot of people say, I don't need insurance, I got a firewall. Well, I compare that to if you're, you have a whole bunch of gold bars sitting in your house and you put up a chain link fence. Yeah, will that stop a robber? Yeah, maybe one who can't hop a fence, but what if they dig under it? What if they just hop it, right? So it helps make it more difficult, but it's not going to prevent it. Strong passwords and password management. I know people are rolling their eyes. Talk to a lot of folks at the carriers who say if we just had stronger password management amongst these clients, we would have been able to prevent these events from occurring. Train your employees. You heard in a lot of my examples, the employee is the last line of defense against some of these attackers. Multi-factor authentication, patching, all of these things, backups, and testing and updating all of your controls. So that brings us to cyber insurance, right? The easiest way to think about cyber insurance is there are first-party coverages and there are third-party coverages. I'm going to turn this over to Alex in just a second, but from a high level to understand what these coverages are, let's dive into it super quick. From a high level, first-party coverage, the key coverage on here is the cyber incident response coverage, right? So that's going to cover you for the data breach coach, right? Who's a legal expert on handling data breaches. They're going to bring in the forensic investigators to figure out what's happening. Is it still happening? What do we do now? They're going to ask and determine, do we have to notify anybody? Do we have to set up a call center? Do we have to provide credit monitoring? From a PR perspective, how are we communicating this incident, not only externally, but within our company, right? What are we telling our employees about it? Then you also have business interruption, right? So BI, business interruption, typically covered under other policies. However, any business interruption that's due to a cyber event is typically excluded under your property coverages. So cyber insurance picks up BI related to a cyber event. Ransomware coverage, we talked about all the expenses that come along with that. Ransomware coverage is included in cyber insurance, one of the key coverages. Digital data recovery, to the cost to restore, replace, recreate data, also covered. Cyber crime, the theft of funds or securities that we were just talking about, that is technically a crime coverage if it involves the theft of funds or securities. However, you will typically find sublimited cyber crime coverages on a standalone cyber policy. And third-party coverage. What about the lawsuits that arise out of a cyber incident? Right? So if somebody sues you for failing to prevent the unauthorized access to information. Another case that I've just seen, my client got hit with lawsuits from a couple different companies alleging that my client had hacked those companies. What it turns out was a hacker had gotten into my client's systems, used my client's systems as a home base to attack these other companies. And that's why these companies thought my client was hacking them. Now, after we did an investigation, determined that no, we weren't hacking them. This is a bad actor in our system. Those companies then changed the language in their lawsuits to come back and say, you know what? We're now suing you not for hacking us, but we're suing you for failing to prevent the transmission of malicious computer attacks or computer code onto our systems. So because you weren't protecting yourself enough, we suffer damages. Regulatory proceedings, right? All kinds of different guidelines relating to data, HIPAA, CCPA, GDPR, there's fines and penalties associated with that. There's coverage for that. Payment card industry, right? So if you're utilizing credit cards as a form of payment, there's all kinds of regulations that come along and associated with that. And I know Alex is going to touch on that as well. And then finally, electronic, social, and printed media liability. So in a nutshell, those are your insurance coverages from the first party and the third party side, right? And the bottom line here is have a plan, right? Benjamin Franklin probably didn't think this quote was going to be utilized in a cyber presentation today in the midst of a pandemic, but I think it still holds true. So you can't control who attacks you and what happens to your company, but you can control how you plan for it and how you respond to it. And so with that, I'll turn it back over to Alex.
All right, thanks, Adam. And while we're switching over here and I, get into sharing my presentation, I wanted to say, two quick things. First, thanks for pointing out that IT security and the insurance products work together. right, to manage this risk. It's really two halves of the same coin. And then while I'm putting my presentation up, I wondered if you might want to comment briefly on the insurance policy as a financial product, right, which is to get money to compensate you if something goes wrong, versus in cyber insurance, where you're actually getting a lot of service and expertise as part of this. I thought you might want to chat about that briefly.
Sure. Yeah, absolutely. And it's what separates cyber insurance from other lines of insurance in a large way, right? Like, it's easy to look at a building and say, okay, if that building burns down, right, it's going to cost me this many dollars to, build a new one that's similar, right? But with a cyber incident, what's coming along with that is the guarantee that when this happens to you and you pick up the phone, there's going to be a dedicated team of experts that are going to jump all over this, right? And it's different, as you kind of alluded to, Alex. It's different than a third-party claim or a slip and fall claim, right? You get a slip and fall claim, and yeah, you need to respond to it in a timely manner, but nothing terrible is going to happen if it takes 2 days to respond to that, right? If you wait 2 days to respond to a cyber incident, there's a chance your company may not be able to recover. Right? So it's crucial that you have those experts on standby. The cyber insurance is funding all of their services, but also guaranteeing that when you make that call, those folks are able to come in immediately and help you respond to it. So great point there, Alex.
I think it's really important to understand that, and just to think about how very much at sea you would be if you didn't have access to that, particularly for mid-sized and smaller companies. So with that, let me take over now and give you a little bit more of the legal perspective, what I come at it, from the standpoint of a lawyer. I'll make a couple quick notes, some of the things that Adam covered. We talked about first-party coverage and third-party coverage. A little bit of insurance lingo really just means, first-party coverage, you could think about your property insurance policy. That's going to pay the cost of fixing your own stuff. Third-party coverage really covers claims that are going to be made against you or against your organization. So just figured we'd point that out at the beginning. Really, the multiple forms of coverage here, I'm not going to go into detail because Adam already thoroughly covered what these different policies are available to cover. But I do want to point out that this is actually 2 slides, this list of different forms of coverage that are available within cyber policies. There are a lot of different items here. And I think when you're thinking about your organization, whether or not you need to purchase this coverage, you should probably look through this entire list and realize it might be more than you realize. You may not have thought of all these different risks that you're facing, and you may not have thought of all the different coverages that you're facing. So for example, I think there's a fair amount of companies out there that are thinking, well, we're not really a technology or a communications oriented company. We're not heavily web-based. We're not dealing with a lot of consumer contact and payment cards. Therefore, we really don't have what we perceive to be as a large exposure. Well, if you went through this list, you'd find that you probably do, right? Maybe you don't have payment card liability, but data recovery. Maybe your systems could be compromised and you'd have a hard time coming back. And those could be systems that are controlling your production line, for example, business income. You might also have ransomware exposure. So again, if you're thinking you don't need it, this list here can help you do a little bit of a reality check as to what the coverage is there for. So with that, let's talk a little bit about, assuming that you're making the decision to go into the market, or you already have gone into the market for cyber coverage. There are a few initial issues or things that you want to keep in your mind as you think about this coverage. And the first and the foremost, and I'm going to come back to this a couple times, is that cyber policies are still relatively new. That seems relatively obvious, but let's point that out. That means that the forms, right, the contracts, the language are continuing to evolve as the technology develops and as events develop, like claims, incidents. The things that happen are going to have an impact on what insurance companies will write into their forms. And the forms that are out there now are different than forms that were available, maybe 5 years ago. They're still changing pretty quickly. As a rule, For much the same reason, these policies are much less standardized than your long-standing forms of insurance like property, general liability, auto, etc. Those policies have been around for a very long time, much more standardized, much more commoditized than cyber. Cyber policies will incorporate language, portions of policies that have worked well in other types of insurance, but might become unclear, and as we're going to see, have become unclear in the context of cyber insurance. So they have tried and true portions of policy language, and once you put that into a new context, it can create some problems. And for that reason, there are some key terms. Obviously, policyholders should read the entire policy, no doubt, but there are some key terms that really require some close focus for the policyholder. One of those is rather, I think, amazingly enough to people and surprisingly enough, is the war exclusion. This exclusion is something that is just as old as the hills in terms of insurance. I have it described here as the old way. In the old way, your insurance policy, your property insurance policy, et cetera, would have a war exclusion. It's very broadly written. Policyholder would totally ignore it, and it would rarely be invoked by the insurer, insurance companies, because let's face it, there are very, very few claims that have arisen out of war. It is just not something that you think about most likely when you buy insurance. To some extent, that's changed because of terrorism, but still largely true. The new way is that there are several major cyber incidents, very, very expensive, very costly and severe cyber incidents that were caused by nation states or state-sponsored actors. And as a result, insurance companies have denied major cyber insurance claims based on war exclusions. So there are some examples of those that are worth pointing out. One of them is NotPetya, which was in the list that Adam pointed out earlier in some of the major attacks. This was a ransomware attack. The United States and the UK governments both determined that the Russian military launched the NotPetya attack. Their intent was to cripple the Ukraine, but the United States and United Kingdom companies and other companies throughout the globe became victims inadvertently of this attack. It affected large companies, Maersk, the shipping company, Merck, FedEx, DLA Piper, which is a major law firm, Mondelez, a food products company, many, many others. Damages worldwide were over $10 billion. May have been the worst attack ever up to that point in time. Well, Merck and Mondelez, both very large companies, sophisticated companies, had purchased cyber insurance and were very disappointed to find out that their insurance companies were not willing to pay the loss. And the reason was the war exclusion.
Hey, Alex.
Yeah.
So just to pipe in on that, on the Mondelez case specifically, the war exclusion that actually went to court for Mondelez was on a package policy and was specifically related to their GL and their property. And that was the one that they ended up going to court over in Mondelez's case. So if you look into that case law, and I agree with you, the war exclusion is something that's come into a much sharper focus over the last few years. And I know you're about to dive into it here, but on that Mondelez case, the one that everybody saw, kind of highly publicized that went to court was Zurich. That was focused on not their cyber policy, but some of their package policies.
Right. Some of the silent cyber that we're going to hit towards the end here.
Yep.
The two other examples, WannaCry and SolarWinds. Again, these are major attacks reported in the news. The WannaCry attack was sourced back to North Korea, reportedly on the orders of Kim Jong-un himself. Some of the victims were hospitals, manufacturers, universities. So again, a lot of different companies, different types of entities out there that would not perceive their risk to include warlike action by a nation state like North Korea. SolarWinds, very similar. This was sophisticated hack into some very secure systems that started through the SolarWinds network monitoring software. It was traced back to Russia. This is being reported in the news just this year. More information coming down, including that it was now being blamed by official state actors in Russia, not just people located in Russia. One of the interesting things about it, and I have a quote here from the New York Times, is that a lot of the victims were not aware that they were relying on software maintained in Eastern Europe, and many did not even know that they were using SolarWinds software until after the attack took place. So what's that mean for you as the policyholder? Well, what you need to be aware of is that the wording of the war exclusion varies greatly, and in part in response to incidents like NotPetya and WannaCry. You will see sometimes the broadest type of exclusion, which I've excerpted here. This is by no means the only form, but this is an example of a fairly straightforward war exclusion that makes no reference whatsoever to cyber risks. If you see this in a policy or in a proposed policy, you want to resist it, sort of full stop, right? You do not want this in your policy. There are better forms available that are specifically oriented towards cyber insurance. And an example I have on the screen is from a traveler's form that you can find in the public domain that you can review and read. Their war exclusion has two parts, the first of which is similar to the broad wording that I had on the screen a moment ago. And the second part says very specifically that the exclusion does not apply to an attack against a computer system with the intent to cause harm, etc., except when in support of 1A through 1C. So it requires that the cyber attack, in order to be excluded, it's only going to be excluded when it's coupled with other war or warlike action. And that more closely matches, I think, the original intent of the war exclusion. So is this the only way to write this language? It's not, and there are other insurers that are writing it differently, but you want to make sure that you get something like that to protect you against, to make sure that the policy protects you against the kinds of risks that have loomed so large already. The next key term that you really want to think about is the security standards exclusion. This might go by a few different names and have a bunch of different wording, but the purpose and the scope is similar from policy to policy where it appears. The idea or the upshot of this exclusion is that the insurer will not agree to be responsible for certain types of errors and failures by the policyholder. One example of language is in Philadelphia Indemnity's form, which is that the following is excluded: failure to ensure that the computer system is reasonably protected by security practices and systems maintenance procedures that are equal to or superior to those disclosed in the proposal. And by the proposal, they mean the application materials in connection with your purchase of the insurance. Now, in Philadelphia Indemnity's form, it also says that covered causes of loss are negligent act, mistake, error, or admission. So I think policyholders would tend to focus on the fact that the policy covers the negligent act, the mistake, the error, or omission, but not realize that deeper down there is this exclusion that's specific to maintaining the types of practices and procedures you told the insurance company that you had. Another example below is that a loss will be excluded if there is a failure to continuously implement the procedures and risk controls identified in the insurance application. Again, the upshot here is similar, that if you don't continuously do or upgrade from what's disclosed in the application, the insurance company is not going to cover that. So why is that such a concern? Maybe at first blush, maybe that might seem fair from the insurance company's perspective, right? If this is what you tell us we're covering, we don't want to cover a greater risk. There are several reasons it actually is a problem in my view. The first is that nothing about this area is static, right? There's continuing changes due to the COVID-19 pandemic, for example. increased reliance on remote work, mobile device usage, use of new applications and new software packages that were not in use before. As Adam pointed out, use of different Wi-Fi networks, home Wi-Fi, for example. So this is an example of something that changed during the term of a lot of policies. What if one of those changes is inferior or lesser and not as secure to what was disclosed before the pandemic? So that creates a problem. There could be an equivalent change this year. We don't know what it would be. Another thing is that there's really tension here between the policyholder's purpose in buying insurance, which is that they really do expect to buy coverage for their mistakes, right? That's a major component of why companies, why people buy insurance. And this exclusion really is at odds with that. Another comparison, or to see why it is at odds with that, is to compare it to your general liability insurance. You might tell your general liability insurance company, of course, we don't leave banana peels on the floor. Just like you might tell your cyber insurance company, well, of course, we don't use weak passwords. However, when you have a general liability claim because somebody does accidentally slip on a banana peel that did not get picked up right away, you'd expect your insurance company to cover that. I think your cyber policy should be structured the same way, and you should work hard to make sure that's what you get. There are other problems too. Some of the wording of these could be ambiguous, right? Phrases like continuously implement, and also the references to statements in the application. This is a little bit more of an insurance law concept, but normally the remedy is when you tell the insurance company something that's truly untrue, really is not accurate, it's false. Their remedy usually is to rescind the policies, to say, look, you defrauded us. They shouldn't just be picking and choosing losses that they don't cover because you made a mistake. So the practical tip really is to ask to get this exclusion removed from the policy if possible, or look for forms that don't include it. Secondarily, if it is included, and really whether it is or it is not, you must be careful when preparing your application for insurance. You will be tempted to overstate or to to speak highly of what your company's security practices are. But you really don't want to overstate that, because if there's an exclusion that says if you don't do these things, that you're not going to be covered, well, that's going to boomerang back around and end up hurting you. And this really could happen to anyone. And that's why I'm going to tie back to the example of SolarWinds. The SolarWinds case famously involves, in part, a password on an important server that was SolarWinds 123. There are some other facts as well. Apparently, that they probably should have been aware of this for a long time and should have changed it. But it's very reasonable to believe that SolarWinds told their insurer, well, of course we don't use weak passwords. Meanwhile, they have this password sitting on one particular insurer that ends up being this means by which the attack is carried out and causes a massive loss. So, here we have a congressperson criticizing the executive for it, and obviously it does seem ridiculous when you see it in print. But again, these are the kinds of mistakes you want to make sure that you have coverage for. Another key item in your review of policy language is the contractual liability exclusion or contractual liability exclusions. There could be more than one, or it could have multiple parts. This exclusion says that there's not going to be coverage for liabilities that are assumed under a contract. And once again, this language, this exclusion generally, has its origins in other forms of insurance and has a long history in various forms of being included in different types of insurance policies. But when we get into the cyber context, it can create some issues. And one example is the P.F. Chang's case. And in the P.F. Chang's case, there was a data breach that involved the loss of credit card information. And subsequently, the credit card information was used for fraudulent charges through the MasterCard network. The MasterCard organization imposes those charges and fees, which are described in the document as fines, even though it's not a government entity. It imposes those charges on Bank of America Merchant Services, which was the payment processor for P.F. Chang's. Naturally, Bank of America Merchant Services has in its contract that P.F. Chang's must reimburse, and they do. So the charges end up being passed all the way down to P.F. Chang's, and P.F. Chang's presented a claim for coverage under a cyber policy, actually, and thanks for Adam to pointing out before that some of these were silent cyber. This was a specific cyber policy, had this contractual liability exclusion in. The result is that the insurance company won. Their denial held up in court because these were fundamentally deemed to be contractual charges that were not going to be covered. So very important for you to think about if you have this risk, especially if you accept payment cards for payment, then you should be aware that contractual liability exclusions, which sound boring and look like standard insurance policy language, might eliminate coverage that you think that you're buying for these PCA charges and the assessments or fines. You may also want to think about the fact that changes in your payment card practices and security due to COVID-19 might expose you to more risk than you were previously aware of, right? You may be using newer, different devices, new procedures, might be accepting telephone payments. All of these things might increase your overall risk. So you need to double back into your insurance policy to make sure that you've effectively covered yourself against that. Certainly any policyholder that accepts payment cards should be thinking about this pretty carefully. Be aware when you look back at your own policy that there's a couple of different ways that this can be treated in order that it be covered under the policy, right? Some insurance companies include this PCI carve back, where they will write it directly into the contractual liability exclusion, right? And one of them is in the traveler cyber form, where the exclusion looks much like it did in other forms of insurance, but then goes on to state that PCI charges are not included, don't fall within the exclusion, the carve back. Some insurance companies separate PCI assessments out into a separate coverage grant that you're going to pay a separate premium for, and it'll be right there on your declarations page. And it's going to be one of the things you think about when you're working with someone like Adam to decide what coverage you're buying. Another issue, and the relevance here should be fairly obvious under COVID, is the portable device exclusion. There are policies out there that exclude coverage for losses caused by mobile or portable devices like laptops and smartphones. Some of those exclusions are specific to the loss of a device, right? It falls into the wrong hands, but some of them are broader than that. You need to be aware of that. Again, working with your broker to the extent that it's possible, you should probably push for this exclusion to be removed, or look for an insurance company that uses a form that doesn't include this exclusion at all. Some insurers will cover you if the devices are encrypted, and I have some concerns about that. On the one hand, at first blush, that might seem pretty reasonable, but I don't know that it's realistic for most organizations, right? There are bring your own device policies. There is a lot of work from home, and the risk that someone's using a portable device to do your company's work and which is not encrypted seems like something that's a little bit much to gamble on. It's preferable if you can get this exclusion avoided altogether. And for example, you may need to see if there's a difference between encrypted and password protected. Those things, and to me, I'm not a computer expert, but to me, those don't mean the same thing. And you need to be careful if you're going to have that exclusion in your policy. A few other practical considerations, as we've pointed out throughout, and Adam has pointed out, the things that you've done to adapt to COVID-19 probably have increased your exposure and may have introduced risks that you don't realize are not insured under your policy. That's number one. Number two, as we pointed out in the beginning, this coverage is continuing to evolve over time. Losses continue to happen, and we learn surprising things about how the policy language operates. Insurance companies are changing their forms, offering different products. This is best tackled in the first instance by having an insurance broker who's sophisticated and up to date on this coverage. As you can hear from listening to Adam, he is immersed in this area of coverage. I question whether the typical insurance broker that's out there selling you your business auto policy, your business owner's policy, that's sort of standard off the rack coverage, question whether they really have the depth of knowledge and expertise to be able to help you to effectively buy this type of coverage. The insurance applications, as we've pointed out, require a lot of care and intention. That can seem burdensome, but it could also be beneficial, right, by requiring your company to think carefully about what it is they're doing and make sure that their security practices work hand in hand with your insurance. Risk and price are connected. I have this in here primarily to point out that if you're not buying the coverage because you think it's going to be too expensive, then it's very likely that if it seems like it might be too expensive from your perspective, it may be that you've got a fairly low risk, and you may find out that the policy is cheaper than you expect. So what you pay, if you're a maybe manufacturing company, now you're not taking payment cards and you don't have an e-commerce website, maybe there's a lot of reasons you don't think you're high risk. You may learn that the premium is actually quite manageable. And if you shop around, you'll find that you could get pretty good coverage for a reasonable price. The corollary to that, though, is if you learn that the premium is higher than you expect, that may be a signal to you that, in fact, you've got much more risk than you realize. So think about that as you decide whether to purchase it. I think that 30% number is frankly not surprising to me, but it really is not a good number. More companies should be buying this. I'm of the view really that almost every company should be buying this. And then lastly, apart from your own cyber insurance program, you want to think about your contracts with others. Make sure that you've got appropriate, up-to-date insurance specifications. And, again, this is wording, insurance requirements in contracts. There is call it the curse of the word processor, where we keep using old forms over and over again. We bring forward language that have been, maybe we think is tried and true for many, many years. Well, not so much anymore. There's new risks. You probably need to think about whether your contract partners, your vendors, suppliers, et cetera, have appropriate insurance for cyber risks, and that they show you that they've got proof of that insurance. So the last subject in my presentation, I also want to point this out. I do not advocate going without this type of coverage. I think you should buy it. But what happens if you told Adam, you know what, I don't need cyber coverage, you decline to buy it, and then you have a loss? This happens. Unfortunately, it happens much too much. The first thing you need to know is don't give up. Don't throw your hands up. You need to look at your insurance program, right? Depending on the facts, you may have what we refer to as silent cyber coverage. Some of the silent cyber can be very valuable. It's not a substitute for buying a purpose-built policy for this type of risk. But if you look at your general liability, D&O, property, your fidelity and crime policies, you may find a little bit of coverage in each of them, or a lot of coverage in one of them, or maybe no coverage in any of them. But you won't know until you look. So don't throw your hands up, dig in, get those policies, get them over to your insurance counsel right away, and get them analyzed. For example, property insurance. Property insurance generally pays for direct physical loss or damage to covered property. So the question is, if an infected computer is totally useless and needs to basically be discarded, does that constitute direct physical loss or damage? Well, the answer is, like the answer to most legal questions, it depends. Case law is a little bit all over the map. It may depend what state or location you're in. may also depend on the very specific facts of your loss. What was it about the equipment that made it totally useless? So you're going to want to look at it. This is an example. An entire presentation on silent cyber could take an hour or two. So we're not going to cover that here. But be aware, you're not going to know until you dig in and look. There is a trend to be aware of, which is that more and more non-cyber policies are including cyber exclusions, right? So more and more, the insurance industry is drawing a clearer line between non-cyber and cyber policies. Just like your general liability policy says we don't cover any losses arising from the use of automobiles, right? To draw a line between your auto and your general liability coverage, more and more you're going to see cyber exclusions in regular, ordinary, non-cyber policies. Timing is an important factor. You may not have access to the types of specialized help that you would get from a real cyber policy, but if an event occurs, you want to get counsel right away, get those policies reviewed, put your insurers on notice, and while at the very same time you're doing that, limit your communications with the insurance company and the broker. I'm not saying don't contact them, but as few words as possible. We had an incident, we're reporting it for coverage. You don't need to say much more about it other than that until your counsel gets engaged, because the way that you characterize the loss can be decisive. If you go back to the language a moment ago, what if the insurance company rep says, well, did you have a physical loss? And you say, no, nothing physical, just data. All right, well, that statement's going to loom large in your efforts to get recovery. So you want to get that counsel engaged, let counsel manage that process. And then lastly, as should be obvious, I will beat the dead horse one more time and say really the better approach, the preferred approach, is to buy a well-designed cyber insurance policy from a sophisticated broker like Adam, who can really help you and make sure that you get the right coverage. So with that, we've reached the end. Sometimes we have time for Q&A, but we're already at an hour, so I'm going to skip over that, but I do want to turn it over one more time to Adam and let him jump in. Adam, if you have any final thoughts that you want to share with our audience, and of course, I should have put your email address up here as well. I apologize. You want to give out your email address so people could reach out to you directly? That would be great.
Yeah, absolutely. And thank you, Alex, and thank you for having me today. I think my key takeaway the key takeaway I want everybody to have for this is cyber is a complex topic, right? There's lots of technical jargon involved with it. There's lots of different angles to it. There's cybersecurity, there's different types of cybersecurity, there's cloud, there's backups, right? And just because there's lots of things involved with it, don't let that stop you from having the discussion, right? So start having the discussion within your company today, right? There's resources available to help kind of break this stuff down and make it more manageable for you and for your company. So don't feel like you're on your own with this. We can definitely help out, and I'm happy to do whatever I can to help out. My email address is aabresc@acrisure.com. Once again, it's aabresc@acrisure, ACRISURE.com. And I'm happy to answer any questions you may have following the webinar. Thank you again for having me, Alex.
Yeah, thank you, Adam. Excellent presentation. It was a real pleasure to have you here today. I think you provided a lot of value for our audience, so thank you very much. And I would totally agree with your final comments and just say, look, the better you have really sophisticated help, the better you have a really good tour guide like Adam, it's going to make this process easier, more productive. So absolutely, don't let complexity keep you from doing this. Get good help and get situated with some quality coverage and manage this risk for your organization. You'll be a hero if something goes wrong. So with that, thanks everybody for attending. We really appreciate your attention, and we hope that you took something away from the presentation.